What if I told you there are over 37 million cryptocurrencies in existence today? That sounds insane, right? Welcome to the wild, wonderful world of digital money. Back in 2009, there was just one digital coin. Now there are millions, and it's completely changed how we think about money. But which ones actually matter? Where should you put your money? And what does the future even look like for crypto? Today, we're cutting through the noise. We'll explore the facts, the key players, and the future of cryptocurrency all in about 8 minutes. Let's start with a truly shocking number. As of late 2025, over 37 million unique cryptocurrencies have been created. But here's the catch. Only about 17,000 of them are actively traded on major exchanges. What happened to the rest? Well, more than half of all cryptocurrencies ever launched have already failed. It's becoming what we call dead coins. In this massive digital ocean, two giants stand tall. Bitcoin and Ethereum alone control nearly 75% of the entire crypto market value. Speaking of value, the total global cryptocurrency market cap is sitting at a staggering $3.5 trillion. To put this growth in perspective, back in 2013, there were only 66 cryptocurrencies. Now that we have a sense of the scale, let's meet the major players that truly dominate this space. First up, the king, Bitcoin. As the original cryptocurrency, it still wears the crown with a market cap over $2 trillion. As of late 2025, Bitcoin is trading above $100,000. Next, we have Ethereum, the powerful number 2. With a market cap of around $390 billion, it's the engine behind decentralized applications, or DApps. Processing over 1 million transactions every day and hosting thousands of DApps and NFTs. Then there's XRP, designed for fast cross-border payments. It's trading at around $2.47 and holds the number 3 spot by market cap. Hundreds of financial institutions have partnered with its parent company, Ripple, to make international transfers faster and cheaper. Don't forget BNB, the native token of the Binance Exchange. Trading near $944 and powering the massive BNB Smart Chain ecosystem. And then there's Solana, a top contender famous for its speed, processing up to 65,000 transactions per second at a very low cost. We also have stablecoins like Tether or USDT. It's the largest one, with a $142 billion market cap, offering a safe haven from crypto's wild price swings. And of course, we can't ignore Dogecoin. Started as a joke, but is now owned by 31% of crypto investors, trading around 19 cents. Here is a key takeaway. The top 100 cryptocurrencies represent over 85% of the total market value. That leaves thousands of other coins fighting for the remaining slice of the pie. Knowing the players is one thing, but where should you actually invest your money? Let's break it down. Before you even think about buying, you need to understand your own risk tolerance, your investment timeline, and your knowledge of the market. This isn't a get-rich-quick scheme. Most experts agree, Bitcoin should be the foundation of any crypto portfolio. Stability and widespread adoption make it the safest bet. In fact, 74% of all crypto investors own Bitcoin. Ethereum offers fantastic growth potential through its smart contract platform, though its ownership has dipped slightly to 49% in 2025. Smart investors do put all their eggs in one basket. They diversify across 3 to 5 major cryptocurrencies. What about those tiny micro-cap coins promising 1,000x returns? Be extremely careful. They are incredibly risky, and most of them fail within just a few months. A smart strategy is to keep some of your holdings in stablecoins like USDC or USDT. This helps protect you from market volatility and allows you to lock in profits. When you're ready to buy, use reputable exchanges like Coinbase, Binance, or Kraken. They typically list between 250 and 500 vetted cryptocurrencies, saving you from the riskiest projects. Instead of trying to time the market perfectly, consider dollar-cost averaging, investing a fixed amount regularly. This reduces the impact of volatility. Remember, 51% of crypto users are long-term investors, treating it as a 5 to 10-year hold, not a quick flip. And the golden rule? Always do your own research. Look into the technology, the team behind the project, its real-world use case, and its adoption rate before you invest a single dollar. If a project promises guaranteed returns, has an anonymous team, or lacks a clear purpose, those are major red flags for a scam. so we know the players and how to invest. But what does the future actually hold for cryptocurrency? The future is already here. Major financial institutions like Visa, MasterCard, and BlackRock are integrating crypto into their services. Bitcoin ETFs have attracted $60 billion in net inflows, making it easier than ever for traditional investors to get involved. Regulation is also increasing, which is a good thing. Clearer rules expected in 2025 and 2026 will boost institutional confidence. Even governments are getting in on the action. Over 130 countries are exploring central bank digital currencies, or CBDCs, because they know the future of money is digital. Beyond just speculation, crypto is solving real-world problems. It's being used for everything from international money transfers and supply chain tracking to decentralized finance. The underlying blockchain technology is also being adopted in healthcare, voting systems, and property records. We're also seeing a convergence of AI and blockchain, creating smarter, more efficient, decentralized systems. And new technologies are addressing the environmental concerns that once plagued cryptocurrencies. Crypto adoption is currently at 11% globally, but it's projected to reach 20 to 30% by 2030. Major retailers are starting to accept crypto payments. Decentralized finance continues to evolve, offering financial services without the need for traditional banks. As the market matures, volatility is expected to decrease, making it more attractive for everyone. All of this is building towards Web3, a new, decentralized internet where you own your data and digital assets. Analysts predict the crypto market could grow to between $5 and $10 trillion by 2030 as global adoption accelerates. Remember, there might be 37 million cryptocurrencies, but only a tiny fraction have real value. Bitcoin and Ethereum remain the safest entry points for a reason. They control 75% of the market. Invest only what you can afford to lose, diversify your holdings, and always do your own research. The future of crypto is bright, with institutional adoption, clearer regulation, and real-world applications on the rise. Start small, never stop learning, and consider crypto as one part of a balanced investment portfolio. The revolution is just beginning. Are you ready to be a part of it? Thanks so much for watching. If you found this video helpful, please hit that like button. And don't forget to subscribe for more deep dives into the world of finance and technology. See you in the next one.